You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. I'm happy to bring back to the show Professor Hersh Shefrin from the Department of Finance at Santa Clara University's Leavey School of Business. He was previously on the Goldstein on Gelt show. You can hear that interview at the radio shows tab of www.profile-financial.com. Professor Shefrin is a pioneer in the world of behavioral finance. He's published a number of books, and one of the books that we've spoken about is called Beyond Greed and Fear. In the last show, he spoke to us about what behavioral finance is all about. Professor, I'd like to ask you to start by talking a little bit about what role fear plays in people's financial decisions.
Oh, that's a great question, Doug. So fear is a primary emotion, and emotions are the elements in our brain structure that motivate us to actually do something, to move. And so fear is a process within our brains that, of course, we know what it feels like to be fearful, but it's a process that alerts us that there's a threat and induces us to begin the action of averting that threat. So fight or flight is a primary response to the emotion of fear, where we have to make a decision how to protect ourselves.
Is the fear that you're talking about different in terms of losing money, the fear of losing your money, compared to the fear of getting perhaps eaten by a lion, where fight or flight would be more the appropriate response?
I think our brains are not clear differentiators. So I think the fear of getting eaten by a lion is of course the outcome is so much greater than the fear of losing our wealth. But the amazing thing is, because the mechanism is so crude, so it varies by degrees. Losing money, especially if it's a lot of money, can really feel terrible. Losing face can feel terrible. So, for example, we all know that in certain cultures, losing face is strong enough to induce people to commit suicide. Mm-hmm. The pain is so powerful. So we do ourselves in if the lion doesn't do us in. But it's a very, very strong emotion that in general is designed to help protect us from potential threats by inducing us to take actions.
So one of the fears that I sometimes try to instill in my clients is the fear that they will run out of money during their lifetime. And that's usually the fear that I bring up, and I show it with charts and graphs. We do financial plans, and usually says things like, you will be heavy in debt when you die. And hopefully that inspires them to start budgeting today to save their money. But I had a recent conversation with a client. I presented a financial plan that I had done, and I said, listen, you're spending way too much. And you're going to, absolutely run out of money during your lifetime, and probably just about the time when you're really going to need it for extra health care and that type of things. And the wife said to me, she said, well, I hope you're not telling us to cut spending. So I said, I don't have an investment solution for your problem. Meaning I don't have a way that I can make investments solve your problem. So, yes, I am advising that. And she said, well, that's just not possible. And let me tell you, it clearly was possible. They were spending twice what the average couple in their place spends. But what is the emotion that would allow someone to, or the behavioral finance feeling that would allow someone to be so irrational?
There's actually many things involved. So the first thing is a lack of self-control. Lack of self-control typically comes from imperfect foresight. So there's our future selves and our current selves, and it's not exactly a democracy, because our current selves hold many more votes and have much louder voices than our future selves. And so, the future selves of some clients are just too quiet to basically win the argument, and you have to hope for something else. I think that it's the case that the future selves, those cries aren't loud enough to generate within the brain something that would allow the activity to take place, the reduction of consumption. We actually know neurologically now that what the different parts of the brain are associated with the ability to defer gratification. And there's certain parts of the brain that are always involved, and in some people, the part of the brain that does the, if you like, the mediation, is sometimes very inactive. The light bulb doesn't come on in a way that's really bright for those folks. And when it doesn't come on for a way that's really bright, then the needs of the present are especially strong. And it gives rise to, behavior that from the outside, some of us would be inclined to characterize as irrational.
We are talking to Professor Hersh Shefrin from the University, from Santa Clara University's Leavey School of Business. This is, in fact, the second time he's been on the show with us. We brought him back because it was just so interesting the first time. If you missed that, be sure to download and listen to the podcast at the radio shows tab of www.profile-financial.com to hear the previous interview with Professor Shefrin. The question I'd asked you before was, what is the emotion that's driving this woman to not be willing to cut her spending? And you said that sometimes people just don't see the future as brightly as they see it today. As a financial advisor, what could I possibly do to help them to see this, to help them to make changes?
Well, so I think that you have, if you tell them what to do, you'll direct the cognitive part of their mind, the rational part, and that's fine. But action only comes from generating an emotional response in them. So I think that you're right, on the right track, to want to induce some notion of fear. And the question is whether you can paint a picture for them of their future selves that would do the trick. So that means asking them to imagine themselves as older, imagine to try and picture themselves as their parents, for example, in a situation where their money has run out, and then ask them, how they would do it, because as far as you can see, that's a situation in which they're going to find themselves unless they behave differently.
And what other emotions would help to drive people other than fear?
Well, hope. So there are positive emotions and negative emotions. Hope is the counterpart to fear, and it's the focus on opportunities as opposed to the focus on protecting your flank. Hope is about thinking about those things that generate, that basically stimulate the reward centers in our brain. And so in the situation you described, there'd have to be a carrot. Something really positive have to be associated with spending less today in order to save for the future. So the focus would be less on spending today and more getting a reward because you're actually engaging in the activity of saving.
Mm-hmm. Meaning to paint a picture of a beautiful retirement with vacations. It's only around the corner if you could save more today.
Yes, exactly. And making certain that they understand that the only way to get there is to engage in more saving today. It's hard. Cognitive dissonance is really strong. So it's hard for us to have these two thoughts in our head that deal with a conflict, something that we want, and something that's difficult for us to have. And some people, deal with that potential conflict basically by going with what's more comfortable, even if it has long-run ramifications that aren't so positive.
Of course, making a lot of these decisions are rather can be an emotionally charged situation. Being calm and rational, I can tell you from the meetings I have in my office where, frequently with couples, the husbands and wives don't see eye to eye, and it's my job to help them come together to make one unified decision. But for a regular investor, right, someone listening to this show today for whom making money decisions is an incredibly stressful process. What would you recommend he should do in order to make rational decisions?
Well, truly rational decisions, I think, are outside the bounds of most of us, even those academics who study behavioral science, I'm sorry to say. It's just, part of the human story. But I think that there's sort of an optimal balance between reason and emotion. We need them both. If there's an overfocus on reason, there's a tendency to engage in analysis paralysis. You don't wind up actually making the decisions. Mm-hmm. And if emotion is too strong, there's a tendency to color the decision so that it is overfocused, for example, on the downside by being overly fearful, or not paying enough attention to the downside because we are excessively optimistic or especially hopeful about the outcomes. So it helps to have some kind of a coach or a buddy, somebody to talk to help talk the emotion to the right level so that the person, feels engaged enough to actually make a sensible decision emotionally, wants to do it, and isn't so overburdened by emotion that they wind up doing the wrong thing.
I hear. So it's a combination of the two in order to try and make a success. Okay.
There's a book called Switch that was on the New York Times bestseller list that is excellent in terms of understanding this balance. And it basically has, a three-step approach to how you deal with these kinds of issues. One is you tell the thinking part of the brain what to do, so you direct it. And the emotional part of the brain needs to be engaged in order to actually do it. And then you need to help them smooth the path by making it as easy as possible to do what needs to be done.
Okay. Professor Hersh Shefrin, it's been fascinating talking to you for a second time. I really appreciate all the time you've spent with us. In the last moments, could you just tell people how they could keep track of your work?
Thank you so much for asking, Doug. I think the best thing to do is to Google me, and almost the first thing that comes up will be my Santa Clara website. And just head on there and see what is new since the last time. I try and keep it reasonably current.
Great. Professor Hersh Shefrin from the Department of Finance at Santa Clara University's Leavey School of Business, thanks again very much for being with us.
Pleasure to be with you again, Doug.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.